We've had a lot of people ask us for an update in the gold market. I'm doing a big picture here. You're going to see the long-term analysis. And coming soon, our Investors Hub. Had a lot of people that are looking for longer-term information. This is going to be it. Watch for the release of the SLIM Investor Hub. Big picture analysis. This is gold. I'm going to show you long-term analysis in the gold market. And you're going to see more like this. Coming soon will be our Investor Hub. We're going to have all of our long-term analysis in there for members. Look for that. We're going to be launching that very soon. All right, let's take a look here as we look at the gold market. This will be a quick one because you'll be able to see how the cycle analysis that we do is so valuable in understanding the market conditions, the market direction, the momentum, everything. So here you could see the chart, candlestick chart, and on the bottom is our reversal scout. Now often you see this as a line on the chart, but I want to keep it clean. So I put it on the bottom in this chart that's a little bit different. You could see when the reversal scout is green and moving up, it tells you that there's good, powerful upside momentum. And when the reversal scout is down, when it's moving down in red, as you can see right over here, then you have this negative market. And then when it changes and goes from red to green, there's a transition there, and you can see when things really change. Solidly green right over here, makes a compound top and then comes down. Okay, that's good information, but as far as our team believes, that information is really lacking in a big way because we want to understand the rhythms in the market. And we can do that by looking at cycle analysis, and you can see that right here. I'm going to switch over now to the monthly cycle analysis, which we share with our members, and I do that by putting our work in there, and that is right here. Now all of a sudden you can see something really changed. This is the same chart I just showed you. However, what this has is clear rhythms that are marked off in these charts. So what you can see is that there is a big chart, a big cycle bracket right in there, and that is the most dominant in each of these harmonic families. You can see right over here, this harmonic family was made up of 2 half cycles or 2 intermediate cycles and 2 quarter cycles right in there. Very clear. Here you could see, well, maybe not quite as clear because the timing was a little off in here, but this you could see was the first half cycle. Here's the second half cycle, and then each of those made up of 2 quarter cycles, as you can see. So that's really a very clear look at how the cycle analysis gives us good information. You can see where this top came and this top came. These were double tops right over there. And in this period where all of them come down, that's the period of risk. That's where there is the greatest amount of probability for a corrective period. These periods where 3 of them, 3 cycles are in corrections, tend to bring bigger declines than the ones that are kind of in the middle right over there. You can see right over here where this was in the middle right there where there were 2 cycles at the half point cycle, and then the next rally came, and then it just couldn't go anywhere. And once it broke this trend line, it told us this cycle was going to be negative for quite a while. Now if you look at this big cycle and this big harmonic family right over there, once it broke out of this level, wow, we became very bullish. That happened right as these were all 3 turning up. And that gave us a very bullish scenario. And then when you look at the reversal scout, right over here it turns green. That's right at this point right over here and tells us, wow, we've got upside momentum going on right now. And the market absolutely soared to the upside. Now, this went much higher than where our projection was at the beginning of the year. But when a market gets into a strong momentum move, as we've seen in many markets, it can really go far. And this one went incredibly far. Let's just take a look here as I zoom in and you see this cycle that we're in right now. So again, here's where we are in this corrective period where there are 2 cycles coming down. You can see the yellow area. We show that as the period of risk right over there, like we did over here, and like we did on these other cycles back over there. So here we are in just where there are two cycles coming down. And if you look right over here, basically what we look for is the next cycle trough to fall sometime in between these two lines time-wise. And Katie does a great job. She puts that information in our cycle low tracker, and you can have all of that information if you become a member. Look at the cycle low tracker, and that information will also be available for long-term for investors in our new investor hub. So you can see that what we're looking at right now is the potential for a corrective period right over here. Now, if I look at the ideal, which is right in between these two blue lines there that you can see, that comes in here around April or May of next year. So that warns me that we're probably in a corrective period. You can see this big tail, that shooting star. It really rejected these levels up over here, which were the fib extensions. A minor fib extension comes off of the minor low. The dominant comes off of the dominant low. And we keep those in there for the members. Now you can see the note over here is that all metals will be a period of potential surge 2026 and 2027. So that's after this low, 2026, 2027, gold can go much, much higher. So that makes this pullback in here, which you see there's only some, 3, 4, 5, 6 months for, this would be a really good buying opportunity were it to get down there. Now, the top of that support zone is at around 3,700. It's about 300 more points down from here. And that would be about 700 total points off of the high, $700, which is not that big. This is just a modest correction that we're looking for in here. And then after that, the opportunity as this turns up again and very likely gets through that high. So we're in a period that could be pretty choppy. Again, you can see the reversal scout right over there, and that is showing you that it is green. Now, in periods where the weekly pattern has a green or positive momentum through the as shown by the reversal scout, and the monthly has it, that's periods that can really spike up. Let's take a look here and make a comparison now. So this is the weekly on the right. This is the monthly on the left. And this corrective period that we're looking at right in here is the same one that's built right in here on the weekly chart. So what we want to do, let's blow this up right now and look at it on the weekly, and you'll see that there are actually two different lows that could happen that are synced with daily troughs. Now, I'm not going to show you the daily cycle, but I actually put that in there for you to see right there. So what it calls for is maybe a short-term low in the next week or two, then another rally, but then coming down again towards late year over here on this weekly chart. So the most likely is that sometime around January we're going to see that low, but that still doesn't line up with the low that we see out over here that's coming on the weekly chart. That's further out there, out in April. That next one would be this cycle right over here that goes out to April, May, June. So that's where the corrective period can go out to. Right now, what we're looking at is a potential for a bottom to come in here in the next week or two, and then a rally, and then come down again. That's the way that syncs with the daily patterns that we're looking at. So all of this is part of this bigger corrective period that you see right in here. Now you can see where the reversal scout turned positive on the weekly chart right over here in August, and that was right over here in August. So that was a period where you got another upside wave that came in there. Here, if you look here where this corrective period was in July, end of June, beginning of July, right in there, that existed right over here where this was green. So what that did was influence this to not be any kind of a decline in there. It was just this sideways correction. And then when it broke out above that cycle peak that you can see we had noted in there, that was positive and it exploded to the upside. So this is how we use the information that we have in the weekly versus the monthly versus the weekly, bringing in even the daily information. This is how you really understand the movements in the particular stock or commodity or ETF that you're looking at by bringing in these multiple time frames. And of course, our workshop, we have a special right now, and you can learn about how to do that by investing in our workshop, which is on a special right now. So again, what we're looking at here is momentum very strong, as you could see in both the monthly and the weekly. We have a correction in here that has started, as you see right over here with that big shooting star. And let's just blow this up right over here. This is suggestive here of a weekly trough being formed in here. But because there's no real visible correction in here, it suggests that this next cycle will then have a rally and then come down again. So that would mean that once this low is established right over here, which comes out towards the end of the year, you probably get another rally right in there that doesn't get to a new high, something like this, and then sometime out there it then turns down again to complete this. That says to me we're going to be in a compound top, a corrective period that could have a lot of movement in it. And again, this is 3,700 there. I'd be very surprised if it got to that support around 3,480. It is possible, but you can see these supports as they come in right over there on that chart. So big picture, super bullish conditions that we see in here in a corrective phase that could get it down really to about 3,700. It should be quite choppy and a lot of movement out over here before this trough is set. So this trough over here, based on the daily chart, says it's most likely that it will come down into sometime in late December or January, try to rally again, and then come down over here into April, May. What's interesting is that this decline over here is very much in alignment with what I believe is going to happen in the stock market. In other words, a large downside correction in the stock market into sometime Q2, maybe Q3 of next year. And when that happens, it's likely to be a liquidation in many things. And gold, silver, the commodities, they won't be able to withstand the amount of selling that could come in there. Because usually when there's a liquidation, investors, they don't stop with just liquidating stocks. They have to raise cash, so they liquidate everything. So gold would be caught up in that downside move that I think is coming at the end of, in the middle of next year. It's likely going to be a decline that lasts for many months, and you can see in here the gold market looks like it is set up for that. So look for a bouncy market right now, probably a short-term low to be set. Some upside attempts, but really I don't see a end to this correction until sometime second quarter of 2026. That is a look at the big picture for gold.